Hello, everybody, and thank you for joining us for today's episode of Trade the Chain. It is January 15th, and we are going to be hitting the Bitcoin charts because we had a little bit of a sell-off that may have panicked a few people in the early morning hours, EST time. But don't fret. Seems like everything's been okay. Ryan, take us away with a little legalese to get people off our backs. We're not selling anything.
Absolutely. Just a reminder, everyone, that everything you see on Trade the Chain, whether it's content or videos or the information provided on the website, it's all for educational and entertainment purposes only. This is not investment advice. My God, is it not? And it should not be construed as such. Don't take investment advice from us, as Alex
Think,
always says.
think of us as entertainers.
Yeah. Trade the Chain is brought to you by Trade the Chain, a 24/7 community of crypto traders in now 20 time zones around the world. Alex, we're almost
Did
totally.
we hit 20 time zones?
We did, yes. We're in 20. Four more people. Come on, get us there. 20 time zones around the world who are trading off of AI-driven sentiment indicators and actionable alerts to help you beat the market. If you want to trade like a crypto insider, go to tradethechain.com and give us a 14-day trial run.
And we have the coin screeners page here after the main page. Get your sentiment analysis for various altcoins. Great service. And a supplement is Market Rebellion Crypto, where we teach you technical analysis behind trading crypto, also applicable to traditional markets. Monty and I publish trade insights on a regular basis. We had 2 this week, VGX, and then earlier in the week, Monty had a real good winner on ADA. So if those are the types of trade insights that you would like to get on a weekly basis, as well as our macro portfolio, go to marketrebellion.com/crypto because you can sign up and get these ideas and allocations from us for just $1. Really nothing to lose. A community of traders beginning to advance all throughout the world, webinars, trade insights, and our platform, which I'll go to now. So looking at Bitcoin on a shorter term time frame, what is very concerning to me is the fact that we've put in this lower high at roughly 39,900, so just under 40K. Lower highs, not good when it comes to a sustainable uptrend, especially when you combine the fact that on the weekly chart, which I'll get into in a moment, we're extremely overbought and are very due for a pullback. Now, to talk about some pretty much basic formations in TA here, we are finding a little tentative support at the support level about 35.7. That's holding support right now. But if you look at the broader formation forming from the top here of about 40K to 30K, we're forming this $10,000 descending triangle, which is not that great from a bullish perspective. Doesn't mean it has to come to fruition. But if we continue going down, test 30K, bounce back, and are rejected with another lower high, that's ultimately not that great. Could send us down into these honey hole type channels that I have highlighted here. I think these would be great buying opportunities if price were to fall that close. But to briefly discuss the bullish case, we're just getting to a point here. We're so high up in the trend that the risk becomes very, very high in each direction. We had this ascending triangle breakout earlier, and it took us up to almost near highs. That was a pretty bullish run. We could have gone higher, but we hit the 9 and the market decided to correct. Now going to the weekly chart, you can see that the MACD here on the bottom, very overbought, but it hasn't quite made a bearish divergence just yet. The thing that I'm a little bit more concerned about is this RSI bearish divergence, because if we zoom out, we can see I've showed this before. I mean, I feel like I've showed this chart a million times, but every single time we get up in this 90 channel throughout bull markets, we correct 20 to 30% over 3 or 4 weeks. So it's very risky. Anyone who is thinking about getting in, not financial advice, of course, but I'm inclined to believe you can do better. I'm inclined to believe that, we had a question, for instance, about, I sold at 35K. half my stack. Should I sell more so I can buy in lower at 26K? Now for that situation, me, I'd feel comfortable just holding all the way down and then just trying to accumulate on these levels like 30, 26, and then at the absolute low, I think 22. But I don't know. That's a lot. Monty, what do you think?
Before you get on, really quick, sorry to interrupt. CJ, why is it called a honey hole? Like that's one of the funnier names I've heard of. I thought I had heard all the markets lingo and I've never heard honey hole.
That's not a textbook term. I just kind of made that up.
Okay.
That's the CJ honey hole.
It's a CJism.
Sorry, Monty.
No, you're good. Yeah, you can stay right here on the 4 hour, CJ. I think this is kind of what I wanted to talk about. And I think you made a great point when you said the risk right now of entering a trade is like actually very high in both directions. And like you said, we had people coming to us during this sort of false rally, thinking about entering at 38, 37, thinking about going long at this position because we had seen that kind of brief correction back down to 30K when we hit that red 9. And for me, I wasn't willing to enter a trade just yet because of a lot of the reasons you mentioned. The weekly chart still looks very bearish just in terms of the technical indicators, kind of screaming that it's overbought. So when I was looking at this, I was ready to re-enter a trade, but I was waiting until we broke past that prior high and we maybe even got one candle of consolidation above 40K. And obviously that didn't happen. We got rejected and are headed back down. So I think best case scenario at this point, in my opinion, I think the downtrend is going to continue here. And I think we may be able to bounce back off some of those lower levels CJ highlighted. 30K and those quote unquote honey holes are a great buying opportunity for not only institutional investors, but retail traders alike. We talked yesterday about how so many whales are content buying this last dip at 30K. And I think they'd be even happier if we reach down into some of those levels that you pointed out. One thing that kind of scares me a little bit more is taking a look at the daily chart, because we don't really have a whole lot of support until, we got that 29.6 support that is similar to the profit-taking levels that you talked about earlier. But if we smash through that, there's really not too much more support until about 22K, where we got that setup trend line from the previous green 9. So the daily chart tells me that there's a little bit of room left to go down, and I would not be surprised at all if we re-entered that honey hole territory and saw a lot of buying going on in that range.
The way Bitcoin is acting.
Is it a honey bowl, a honey pot, or a honey hole?
The latter.
Okay.
I just want to point this out as well in terms of sentiment. When it comes to accumulating Bitcoin, historically, you want to accumulate it when, we are in low Google Trends data for the term buy crypto. Right now, we are higher than we have ever been before. That's pretty interesting and I think noteworthy. Now, I do expect more capital overall to come into the space, but when it all comes in at once, it leads me to believe it's not as sustainable. Let's look at this. How did you guys feel when you woke up this morning? Honestly, I felt kind of like this. I'm a genius. We're all gonna be rich. That's kind of how I felt. So just let's be cautious. It's a lot of risk. Let's be humble. Let's respect money and respect the market.
Also, it's interesting to see where the daily sentiment right now in Bitcoin is pointing towards bearish on Trade the Chain, as well as even the 1 hour projection is kind of really just middle down the road. I'm curious to see how this plays out, and you guys are putting forth some really good terms and making a case for a downward movement. So it's going to be interesting.
Feels like when in the old days, what was the airline ticket website where they'd tell you just wait a week to buy your flight tickets, and you'll get a better price. It almost feels like that. But like there is support at like the 18 to 20,000 level because that's where most of the institutions got in. So I'm no expert. No one ever thought oil would go negative, and it did. So I can't imagine that Bitcoin would go below those levels. But just there must be some people out there wondering what's the likelihood of that happening is. Do you think there is a likelihood of that? And what would that look like?
I think the likelihood is low. One thing that you said a few weeks ago, Ryan, that actually kind of scared me is like, we've talked so much about how the institutions are driving this market. But one thing that we have to remember is the institutions are definitely smarter than pretty much every trader in the market. They know exactly what they're doing, and they do have an incentive to drive price down below those levels to increase their own stack. That being said, I think there's a good, last week set a good precedent where price dipped to 30K. And like we pointed out, the amount of whales reached an all-time high. So it seems to me like it's very unlikely that the whales would kind of pass up a buying opportunity anywhere below 30K. So I think that they've kind of formed a really nice support net for the price of Bitcoin here, kind of a price floor at what's looking to be around 30K.
What about that guy or that trader rather? We don't know if it was a guy, but the trader who went from a 36K call option to a 52K. Do you think that that's part of the smart money bet? Is that where we're going to net out at the end of the month, or are we kind of going to trade sideways like Trade the Chain is suggesting, and just kind of stay in this range as it keeps bouncing and testing those lows, buoyed up by institutional buyers getting a discount?
Yeah, I think most of those traders who were probably in around 21K are obviously very profitable. So they're probably rolling those initial options positions into the future. And if anyone who isn't familiar with that options turn, it just means that you're locking in profits and then buying the next option a couple more weeks out to give yourself some more time. It's a way of pretty much taking a little bit off the table, but still staying in the position. And that's one of my favorite types of options position. One of my favorite types of options trades to do is to like follow someone who has been right. But in this case, they're rolling. So they've already made quite a bit of profit. So we'll see.
Fair enough.
All right, cool. Well, there it is, folks. I don't know. It sounds like a little omen to kind of pause for a second, rethink your BTC buying right at this moment. But
sell into the VGX rally, right? Sell your Bitcoin, buy VGX.
Geez, we couldn't get through an episode, could we?
Hold on, I want to show you guys this too. Speaking of Google Trends data, look at this for Voyager token.
Wow.
Looks just like the price chart.
Oh, that's incredible.
Oh my God. All right. Well, listen, everybody, that's your fix of Bitcoin for today. We will be back again, but until then, everybody, happy Friday. Have a great weekend. Hold on to those handlebars, as CJ and Monty pointed out, and we'll see where we go from here.
Thanks,
everyone.